Today, we are jumping straight into a definitive, data-backed review of Hong Kong virtual business bank accounts, specifically tailored for non-resident founders and foreigners. If you're an overseas entrepreneur trying to tap into the Asian market, well, you already know that securing a reliable financial base can be a massive hurdle. So we're cutting through all the noise. We're looking strictly at the data from the providers themselves to show you exactly what works and what doesn't.
Okay, let's kick things off with this pretty jarring contrast. 2 to 4 weeks versus 48 hours. If you go the route of a traditional Hong Kong bank as a foreigner, you are staring down a 2 to 4 week compliance review and almost always a mandatory in-person branch visit. But if you leverage the right virtual solutions, non-residents can get approved and fully set up in as fast as 48 hours, entirely remotely. I mean, that is a massive operational difference for a growing global business that needs capital fluidity right now, not a month from now.
Before we dive into the exact steps of opening your virtual business bank account in Hong Kong, let's talk about your foundation. You absolutely cannot get approved for top-tier digital banks and fintech platforms without a properly structured, legally registered local entity. Most foreign entrepreneurs try to open these remote accounts using their domestic LLCs or flimsy paperwork, and that is exactly why they face endless compliance rejections, endless requests for documents, and frozen funds. To unlock seamless global banking, your business needs to be a legitimate, officially recognized entity by the Hong Kong Companies Registry. That's where OSOM comes in. OSOM is the absolute best service out there for global founders, handling your entire Hong Kong company formation 100% remotely. They take care of all the heavy legal lifting for you, securing your legally required local registered office, providing your mandatory company secretary, and filing your incorporation documents. Once OSOM establishes that rock-solid corporate framework for you, getting approved for a remote virtual bank account to handle your global transactions becomes a breeze. Establishing this financial separation is non-negotiable. Check out the link in the description below for my full OSOM review, and be sure to use my link to get your Hong Kong company set up right through OSOM today to unlock exclusive discounts and perks. Get your banking foundation handled first, and then let's get into the setup steps.
Section 1. What are virtual accounts for foreigners?
So the absolutely crucial point here is distinguishing between the different types of digital providers in Hong Kong. The data shows that official HKMA-licensed virtual banks, like ZA Bank for example, typically require a local Hong Kong ID for their seamless app-based online setup. If you don't have an HK ID, you basically hit a brick wall, well, or you get pushed into a really complex offline process. Therefore, for a non-resident, a true virtual business account is primarily offered by MSO-licensed fintechs like Airwallex or Stratries. These platforms are built specifically for cross-border money flow, and they're legally structured to provide true 100% remote accounts for foreigners.
And this comparison right here perfectly illustrates why non-residents are shifting gears. Traditional banks, they demand flights to Hong Kong, hefty minimum deposits ranging from 10,000 all the way up to 50,000 Hong Kong dollars, and literally weeks of waiting just to open an operating account. In stark contrast, the virtual fintech route offers a 100% online setup right from your home country, zero minimum balance requirements, and approvals in just a matter of days. For overseas founders, this completely eliminates the initial capital drain and travel headaches.
Section 2. Key features and setup steps. Now, when you compare the top players, it's really interesting. Airwallex and Stratries cater heavily to cross-border and global SMEs. Airwallex gives you access to over 90 currencies, and Stratries offers 11 major currencies, both with 100% online remote onboarding designed specifically to capture foreign corporate entities. ZA Bank, on the other hand, is a fantastic virtual bank, but it targets a very localized audience. It only supports a few currencies, and crucially, it strictly requires a Hong Kong ID for that fast app onboarding. So as a foreigner looking for international flexibility, the fintech options are definitely the way to bypass the localized red tape.
Okay, so how does this setup actually work? Well, it follows 4 exact steps. First, you confirm your eligibility and industry risk. Second, you prepare your documents. Third, submit everything via their web portal. And fourth, complete the digital KYC, that's Know Your Customer, and video verification. These fintechs completely replace the traditional branch interview with secure digital facial recognition. And you know, it's important to note that digital KYC is now the gold standard under Hong Kong's revised anti-money laundering ordinances. It allows them to maintain rigorous compliance without forcing you onto an airplane.
Now listen closely because you absolutely cannot skip these. Fintechs rely heavily on clean, high-quality digital copies of this exact documentation. You need your certificate of incorporation, business registration certificate, articles of association, passport copies for key directors and shareholders holding more than 25%, a board resolution, and, this is absolutely key, a proof of residential address dated within the last 3 months. The data tells us that a missing, uncertified, or outdated proof of address is literally the single most common cause of delay. Having a flawless document package ready to go is the absolute fastest way to hit that 48-hour approval window.
Section 3, Real-World Global Use Cases.
Let's anchor this in some hard data. 96%. That is the percentage of eligible clients using providers like Stratrees who get approved within 3 business days. I mean, that absolutely proves the efficiency of the MSO fintech model for non-residents. It's not just a marketing promise, it's a rapid deployment pipeline for foreign businesses that need immediate banking capabilities to commence trading or pay overseas contractors. As noted in the AirWallex industry data, this shift is especially valuable for non-resident founders and remote teams, who can now open accounts from overseas without traveling to Hong Kong. This hits the nail right on the head for our core use case today. If you run an e-commerce store, a digital agency, or a global SME, you can use these multi-currency accounts to pay suppliers in China and collect revenue in US dollars or euros entirely remotely. Eliminating geographic borders in banking is exactly what makes these accounts so absolutely crucial for modern businesses. Now, traditional banks rely on the SWIFT network, which means intermediary bank fees and, honestly, terrible exchange rate markups. But the data shows over 90% of AirWallex transactions actually bypass the SWIFT network altogether. They utilize local payment rails in over 120 countries. So instead of your money bouncing across borders through multiple intermediary banks, local rails let funds be paid out domestically. This completely eliminates those high cross-border telegraphic transfer fees, which directly preserves your profit margins on international trade.
Section 4, Honest Pros and Cons. All right, time for an honest reality check. While the pros are undeniably awesome, 100% remote onboarding, massive multi-currency access, 0 account opening fees, and no minimum balances, these do come with strict limitations. True HKMA virtual banks will usually reject you if you don't hold an HKID. Plus, because everything operates entirely online, there are absolutely no physical branch services or cash deposit facilities. And most importantly, there is a very strict rejection policy for high-risk industries. Let's be super clear on this limitation. If your business operates in high-risk sectors like virtual assets and crypto, precious metals, money service businesses, trading with high-risk countries, or holding client funds in trust, you should expect enhanced due diligence, massively extended timelines, or just an outright rejection. The compliance burden and risk of financial penalty for servicing these industries are incredibly high, so digital platforms built for volume and speed often avoid them entirely. They are optimized for low to medium risk trading.
Section 5, Final Verdict and Summary.
So what is the definitive verdict? Well, it all comes down to your specific operational needs. If your business requires heavy trade finance, letters of credit, or physical cash, you literally must endure the traditional bank route and fly to Hong Kong. If you're a local resident with an HKID, dealing mostly in Hong Kong dollars, HKMA virtual banks like Zaybank are perfect for localized efficiency. But if you are a non-resident foreigner who needs multi-currency capabilities and a 100% remote setup, fintech payment service providers like AirWallex or Stratrees are undeniably your best, most efficient option. Let's quickly summarize our core takeaways from the data. Traditional banks mandate travel for foreigners. HKMA virtual banks are mostly restricted to HKID holders. Fintechs, however, offer 100% remote, fast setup for non-residents. Their multi-currency features actively save you money by ditching high FX and SWIFT fees. And finally, clean documentation is the single biggest factor in getting your account approved quickly.
I'm going to leave you with this one provocative thought as you evaluate your own financial infrastructure moving forward. Is your current banking setup creating a bottleneck for your cross-border business growth? If you're losing margins on FX fees or struggling to open accounts overseas, it might just be time to look at the virtual options we broke down today. Thanks for joining me on The Explainer. I hope this structured dive has empowered you with exactly the knowledge you need. Keep learning, keep building, and we'll see you next time.